Where's the outrage? What the heck is going on here? What's up, everybody? Welcome aboard to Bubba's Bottom Line. It's always great to be with you on the weekends. And of course, obviously, we have some very sad news to report today. President George H.W. Bush passed away over the weekend. And again, always sad to lose a great man and a president. And of course, that will mean that the markets will be closed on Wednesday, December 5th. There will be no trading in honor of. And couldn't think of anything better. Again, we have to respect our presidents, and who, no matter what you thought of him, I think you have to respect. And thought he was a great man and did what he could. And of course, we send out our condolences to the family and remember back to things that were very well. And of course, that was the 41st president, H.W. Herbert Walker Bush. In the meantime, where's the outrage in the markets? That's what I'd like to know. We continue to hear, while the markets were going down, we kept hearing about the high-frequency traders and the algorithms. And of course, again, last week, our commentary was just on this very subject. Now, of course, this past week, we had the biggest up week since the election, of 2016. And again, I'd like to know where the outrage, where's the crybabies talking about the high frequency trading? Where is all that nasty, how bad high frequency trading is, which just goes to prove the point that we made last week, that it's a bunch of crap and that the people that report on it have no idea what they're reporting on, because again, you don't think the algorithms only drive the markets down, or they also drive them up. And of course, the truth of the matter is they don't drive them anywhere. They make markets on both sides. Anyways, so where's the outrage? Where's the outrage on the Federal Reserve, which will be our commentary today? But of course, it looks like Chair Powell caved to President Trump, and again, we'll get into that later. But of course, we saw a market on Wednesday that was up about 600 points that continued to spike higher. Again, we look at these things. And it seems to me that they only complain when the markets go lower, because how could the markets dare go lower? All right. But in the meantime, there's a lot of things going on in the world. And of course, we have now found, with as much debt as we have, and of course, that's been one of our regular subjects, that the debt continues to grow and nobody seems to care. And of course, when you go back into the early 1900s, in the 20s and the 30s, and they had a job that was called the custom peddler. And the custom peddler was somebody who actually learned how to take goods out of a store and sell them to people who couldn't afford them, but sell them on time. Okay, installment payments, right? And of course, we are now bringing that back to the millennials as we bring them back. We bring back the custom peddler in a new way, to trap whatever cash they have, because of course they want to spend. So now we've got the new payment plan back in vogue, going back to the custom peddler. So again, like markets and businesses, although technology changes and the way we deliver information changes and everything, the actual dollars and cents have not changed. And I think that becomes, rather interesting when we see some of these things come back. And of course, you see it through, through a lot of the peer-to-peer lenders. You see it through even the payment plan. Did you ever think you would have to pay something to pay somebody? So again, I think that those are things that are really kind of fascinating when we look at it. And of course, we're coming at the end. We ended the G20 meetings last night, and of course, it concluded with the big dinner with Trump and Xi. And of course, it looks to me, based on the reports, that they have come to an agreement to put back raising any more tariffs from now. I guess we'll call it a ceasefire, a status quo, or something of that nature. Not continuing to hike up these tariffs yet. and see if they're going to work something out. So the real question will be, is this what the market was expecting? Was the market expecting more? I mean, the consensus opinion throughout Friday and towards the end of the week was basically that there would be some sort of a truce. So we would call this a truce. So the real question will be tonight, when the markets open, how and what will they open like, and what will it mean to everything else? And I think really what it means is that I think this is what was expected, and I would be shocked if the extent and the size of this rally continued. Again, does it mean that it won't continue? I can't say, but I think when you see, and again, we talked about this, the biggest up week of since 2016, so it's almost 2 years, right? 2 years and a monster rally. And I think one of the interesting things to note from last week's holiday week, where the markets got trashed, to this week's big up week, where we erased all those losses, what did you see? What was the common thread? Well, there was no volume. Okay. In fact, volume this last week was barely higher than the holiday week's volume, which was 4 days versus 5 days, holiday versus no holiday. So what does that mean? Well, again, I never get too excited about markets that are going up on light volume. I don't think that that's anything to get overly excited about. Now, again, I'm not saying that the markets can't go higher. I'm not saying that the Santa Claus rally isn't here and it will not continue, but I would highly doubt it. And certainly I would not be interested in stepping in here. You know, again, when we talk about different things about markets, we talk about the breadth of the market, okay? The advanced decline line. And of course, you can interpret them any way you want, but what you can't interpret is that there are more new lows being made still than new highs in the market. You're starting to see companies really get shattered on bad earnings. You're seeing a lot of major players under a lot of pressure. So again, to me, that indicates that there's a far bigger problem coming forward, and I do believe that that's going to be the case. Now, again, it may not be this year. There's no way that I can time the market to you and tell you exactly when it's going to go. It's very similar to what we went through together within crude oil. Okay, we were short crude oil, and we had to puke it out up in the 70s, and then we found a new reason to get short on the way back down, and we were able to ride it, and we were actually right. But if you would have over-invested and over-shorted crude oil at the time we first did it, you'd be having a little bit of a problem right now because you wouldn't have been in for this secondary sell. So again, certainly there's no way that I can time the market out here for you, but I do believe that if we look into, probably the first quarter should be, in my view, pretty ugly. I think there's a lot of things going on in the general markets, and I think this goes into the interest rate environment, which has been one of the big causes of concern, because again, as we go into the next quarter's worth of earnings, what are we going to see? Well, we're going to see, we're going to see narrower spreads on earnings. We're not going to see earnings to be as strong because, again, employment costs are higher, borrowing costs are higher, cost of doing business is higher. Now we will hear the bull and the BS, okay, and the garbage, which this is all what it is, about, well, the tariffs, we have to raise our prices, we didn't make enough money, the dollar was too strong, this was the problem, that was the problem. You know what I find? I find that to be a crock. We've talked about this a couple of times in the past, but it's like Starbucks, and not to pick on Starbucks because they're all like that. But they love to raise the prices. The minute coffee goes up, they love to raise their prices, but they never come down. About 10 years ago when cotton was going crazy, I was on CNBC when they still had me on before they threw me off, and they were talking about cotton, and I was on talking about cotton. I said, the cost of cotton compared to what the overall cost of the jeans or whatever cotton you're buying is remote. It's ridiculous, okay? It's, let's say, 1-2% of the entire product. So are you going to really want to sit there and tell me that the cost is going to go up dramatically? So again, this is the same old story, and this is, in my opinion, this is the way that a lot of the retailers and a lot of everybody else is going to be able to raise their prices by continuing to cry and whine about the tariffs and the trade talks and all these other things that are going on. And you will see that these prices will never come down again but they will get up, and I will venture to say that all these whining, complaining companies about this particular problem will show record profits, or very big profits anyways. Okay, so to me, again, I look at this very skeptically because I've seen it happen before. I happen to remember back in the day when we had the oil crisis, and of course Exxon and all those big oil companies were crying and whining every single day. And what did we find out? Well, their next quarters, they reported record profits never been seen before. So again, put very little stock into the manipulation of what companies are telling you, because every problem that they are complaining about right now based on trade can be easily solved by hedging the dollar, hedging whatever it is that they're doing. And again, this goes back to the airlines. Okay, airlines, if you remember back in the day, airlines used to go bankrupt like every third or fourth year, right? And the reason is because they were too stubborn and refused to hedge oil. Well, Herb Keller from Southwest taught them how to hedge oil because he did it. And of course, if you understand what your exact fixed costs are, then it doesn't matter. Well, you can hedge the dollar, you can hedge the yen, you can hedge any currency you want. So again, I put this into the point of ridiculous and the sublime, that we continue to listen to this BS banter, and yet they get backed up. And the real complainers and the real whiners here are the politicians and the lobbyists. Okay, I saw a report on Friday from one of the networks that were talking about the grain markets, and I go, really? The grains are going higher. Why is there such a problem? Now, again, I understand there could be some issues, but we're still going to be a supplier. And last week, I think it was Wednesday, there was a major purchase, which only one place could really be the buyer. Okay, of course, it came from sources unknown. Okay, of soybeans. Now, again, are you going to really sit there and tell me? Again, I understand there could be some issues here, but the real market comes back down to supply versus demand. And of course, right now, if there's no issues throughout the globe, then we will be down on selling what we're selling. But of course, if there becomes some weather issues or somewhere else, then our sales will grow. But at the end of the day, it comes down to price, it comes down to delivery, and it comes down to quantity. And of course, as we continue to grow, the demand is going to continue to grow. So again, I'm not saying there's not any issue with it at all, but I am saying that the bigger deal is being made by the politicians and the lobbyists, because really, in my opinion, they don't give a rat's potato about anybody else but themselves and how much money they can grab from the markets themselves and from everybody else who's supporting them. This is Bubba's Bottom Line. Todd Bubba Horowitz. We're going to step out here for a break, and we'll be back with more. In the meantime, I want to remind you, check out our sponsor, Advantage Gold, which is Adam Barata, and he will be happy to send you his book, Gold is a Better Way. And you can get that for free by going to bubbatrading.com/gold. And of course, don't forget about our high school investing program. You can help us out if you'd like at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. And of course, now let's get back to Bubba's Bottom Line with me. Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz with you. And of course, as we did talk, we started to talk a little bit about the markets, and I had a monster rally last week. It was painful. Again, for a guy that was a little bit short, it was a little bit painful. And of course, it was really a tough trade as the markets really just ground higher. There were other, into Wednesday, it was kind of just a grind straight up. And of course, that's when, Fed Chair Powell caved in. But again, we'll get into that in the commentary. But in the meantime, so you did see this dramatic spike in prices. And of course, you saw, it looks like oil has probably made a temporary bottom. Now, we still want to be sellers of oil. We are not buyers. We would be buyers of oil on a very short-term basis. Looking, as a bounce up, I think you want to look at the levels of 54 to 55. But again, if you're going to hear, and you'll hear this all week, well, the shale producers, need this. And I listen to these networks. I don't want to name names because I know these guys, but it makes me want to puke every time I hear them speak about, well, the shale producers need 55. Well, let me ask you a question. If the shale producers need 55, why are they still putting up oil rigs now? Okay. Now, why are the amount of rigs going up there increasing? Okay. Even though we have a glut of oil, okay, even though oil prices are falling to the toilet, yet they're putting up new oil rigs. So explain to me how that's possible, okay, if we really have the problems that they're saying. If the shale producers really need 55 and they're all going out of business and the banks are calling their loans, then why are they still pumping? Okay? Just a simple logic problem would be more what I'd look like. Gold, it really just continues, nowhere. We've now rolled over into February gold, and February gold, our range is 1215 to 1240. Now we think it's going to go higher. This pattern looks very similar to where it was back in October, early October, or late September. And I think we're going to get just this one of these pops and we're going to break out again. Our first target here on the gold markets is about 1275. Again, it doesn't mean it won't go down, and I'm not telling you that there's no chance we go down, because there's always a chance. This is one of the reasons that you have to be disciplined enough to say, okay, I'm out. I made a mistake. It was a bad trade. I will re-enter, instead of watching it go dramatically against you and then find out that you've got much bigger problems. That, again, is something we look at. Grain markets after Monday. Now, again, if you look at the grains on Monday were ugly, okay, especially soybeans. But it looked to me, and I was on RFD Monday afternoon, and I said, I think this is probably a pretty good buying opportunity. And as it turns out, it was. We rallied back about 40 cents from the lows in soybeans, rallied back about 12 cents in corn, and even wheat, which used to be the strongest, now is the weakest, but even wheat lifted off the deck. Now, I don't know how this trade war, the potential ceasefire is going to affect the price of grains this week. Personally, I believe, and I've said going forward, I think they're going a lot higher. It doesn't mean there won't be some heartburn in between there, but I think they're going a lot higher. And I think one of the reasons we're having such a dramatic oversupply in this country is because I believe that the farmers and producers that I talk to are storing, because there's no reason to sell at these low-end prices when you believe the prices are going to go higher. And I certainly would not be a seller at these dramatically low prices. I think there's a lot of room to go to the upside, and I would continue to store if I could. Now, again, I would not store. If I had to pay storage, I'm not storing. I'm selling, and if I want to stay long the market, I get long on the board. Okay, that's just something to think about. But again, overall, I'm waiting for better prices, because I think we'll see over $10 beans in the first quarter. I think we'll see over $4 corn, and I think we'll see $6 wheat. So again, I haven't changed my views. Now again, I've got my added points or my drop dead points below, but right now we're not there. Livestock looks pretty good. Had a rough week last week, especially the feeders. Feeders were really, really nasty and ugly, and they did hold the 145 level, and that will be very key here, is 145 in January feeders. Fats looked great. I mean, again, they failed exactly where they should have, and they pulled back, and they're in real tight consolidation, looking for a breakout there. And then, of course, hogs have had just a dramatic move to the upside, and there's going to be some pullback, but we expect to see February hogs get over 70, if not higher. So again, I think that the ag space, and again, the thesis we've been going through and we've been talking about for the last few months is not if the equity sell-off, when the equity sell-off, I believe that new money is going to flow into the grains and into the livestock, because I think what you're going to go right now, a lot of the alternative investment guys, a lot of the CTAs are dormant right now, because when equities go bananas and everybody's in the equities, there's no reason for alternatives. So I think that's something that you will see going forward, and some money flowing in there. Bonds, they rallied a little bit, but when you look at the interest rate market, okay, and they talk about mortgages, I guess that would be the best benchmark to look at. The benchmark of mortgages still were either flat to higher last week. So again, even with the Fed stopping and saying, well, blah, 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 the end of the day is mortgage rates, which again, remember this about interest rates. Remember this about markets. Eventually, the markets take over. This is why, we will talk about this in our commentary, but this is why the Fed always blows it, because they do not understand the free market system. Okay, they understand the manipulative system. But I think what you look at here is you look at the actual what is going on in the real markets. Okay, you look at what's going on in LIBOR. Okay, the London interbank lending rate. You look what's going on in the yield curve. You look what's going on in the short-term money. So again, these are all things. So again, I think that the bonds futures are a great sale. I think they've got a dramatic way to go on the downside. And conversely, I think the dollar is a buy. Again, the dollar now has broken out once again above that 97 level we've been watching. And it's been churning, right? We've been churning and rising. I could see, I thought we'd get to par before the end of the year, but I do think we'll see par dollar in the first quarter. And I think many are concerned at the correlation of the dollar to some of the commodities. At par, I don't think that's a problem. Okay, if the dollar expands too much farther, I then think that has a direct effect on the prices of commodities and dollar denominated. But I don't think that's the problem. I think the biggest issue today is the debt structure and what's going on with emerging markets and what's going on because of the strong dollar. Okay, because it does affect, again, the strong dollar does affect those emerging markets that borrowed cheaper money from the United States because the dollar was also weak. So they were getting the double benefit. You know, if you remember, we've talked about this before. One of the reasons the Fed wants to keep the pressure on the dollar, because when you're out of this country, if you have a weak dollar and you're borrowing money at 3% against the weak dollar, it's really like borrowing money at 2%. But all of a sudden, the dollar rallied, so it made their currency weaker. So that rate went from 2 to 4. Okay, so even though they borrowed at 3, based on the price of dollars, it went to 4. So again, these are things that are very, very, would create the contagion and create the problems around the globe. And of course, globally, you know, I don't see the massive growth. I think that, you know, again, I think we're doing well. I think the United States is doing well. I think the economy is improving. But of course, with an improving economy and with higher wages, and of course, with higher borrowing costs, that also creates less earnings. So again, that brings into all of these things that we think. And of course, I think the most interesting thing, and the one thing that makes me guess that the Fed may not be as aggressive going forward, is Goldman and JP are still forecasting 4 rate hikes for next year. Now, I think there should be 4 rate hikes, but I don't know if they're, again, you have to always remember, as we talk about often, a lot of these notes and a lot of these big calls by some of these bigger banks are not always led to be exactly what they're supposed to be. Sometimes they are using the opposite approach to what you're looking at, okay? So I think that that's something. And of course, the cryptos last week had a little bit of a rally, came back a little bit. But I think, again, we've talked about this, you know, the blockchain is real, okay? And now the blockchain is out there and being used for crude oil trading, okay? So again, I don't know which cryptocurrency is going to be the one that's going to survive, or which 10 or which 20. I know that there were some problems, and of course, did we not remember there was a lot of these same problems in the intranet days of the 90s of some phony companies that were pumping and dumping? I mean, is this something new? So again, you had Floyd Mayweather, who got involved with somebody that was referring people to a phony cryptocurrency. Again, it's something that happens. Remember, if you always remember this, anytime there's money, anytime there's a lot of money to be possibly made, you better watch out. Okay, it doesn't mean you can't make it, but remember, somebody is there to try to scam you out of your money. Okay, Ponzi schemes and scams go on every single day. Okay, just like all those emails you get about the prince who died who left you $90 billion, right? It happens all the time. So don't get trapped. My biggest words to you before we go to break here is to make sure that you do your own research before you step in and reach in your pocket and pay for something. Make sure you do your research to make sure that it's exactly what you think it is. It doesn't mean you'll be right, but at least you'll have done the research so it won't be a major surprise. This is Bubba's Bottom Line. Todd Bubba Horwitz. We're going to step out here for a break and we'll be back with my commentary. Hey, everybody. Remember my friend Adam Barata from Advantage Gold? He was on the show, the radio show. He's going to be my first guest on our new video podcast. In the meantime, he has a book he wrote, Gold is a Better Way. He's offering it to you for free. All you have to do is go to bubbatrading.com/gold, and he will send you a copy of his book. And again, I think that he's got a pretty good plan and a pretty good idea, so check it out. at BUBBATrading.com/gold. And of course, we're really struggling with the high school program. We're going to try to make it, but this may have to be our last year because it's just too capital intensive and because we can't get sponsors. We've been going to Patreon, and of course, many of you have helped, and we thank you for that. So if you go to patreon.com/BubbaTrading, again, that's Patreon, patreon.com/BubbaTrading. It'd help us out, and maybe we can get through and continue this program after 9 years that I have funded personally myself for 8.5 of those 9. But in the meantime, let's get back to Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line, Todd Bubba Horowitz. And of course, it's time for my commentary. And who's surprised that it's about the Federal Reserve, the organization that should be ended or audited, disbanded, who came up with the name Federal Reserve, even though they are a private corporation, supposedly. Now, again, I always question whether or not they're private because, again, on paper they're private, but obviously a lot of things go on. And of course, we saw President Trump berating Jerome Powell. And I think on Tuesday, there was a big article, I think it was in the Washington Post, wherever it was, but it was, and there was tweets going out. I'm not happy with them. I'm not happy at all with my choice. Interest rates are too high, the whole story. And I understand where Trump's coming from. He's a businessman. And if you're a businessman, you don't want rates to go higher. But totally berating Chair Powell. And magically, like a magic act, on Wednesday, when the meeting was over, or when he spoke or whatever, and he spoke at the Economic Club, I guess it was, all of a sudden, the things he said a month earlier, before he was totally berated, okay, it changed. Dramatically so. We went from, we got to keep raising rates because there's too much growth, there's too many things going on, to, well, maybe we don't have to do anything anymore. And maybe we'll cut back on the rate hikes. And of course, that exploded the markets, which I'm bitter about that, but that's besides the point. Actually, I expected it. But simply put, we know that the interest rate market will figure out its own way. And I don't know why we need the Fed to determine monetary policy. I don't know why we need the Fed to determine, to help bail out the banks that were too big to fail. To me, again, I think that the Fed should be ended. Okay, there is no need for this is, when you look at some of what's going on with the cryptocurrencies, when you look what's going on, everything, the Fed takes away the free market. Are we not fighting for free trade with countries? Well, what is wrong with free trade of currencies? What's wrong with free trade of interest rates? Asset classes will price themselves, and they will price themselves correctly because they will be built on the supply or demand that is needed for those. And I'm saying this to you today. It is December 2nd, 2018. The Fed will blow this 100% because of their clueless nature. When you only look at paperwork, when you only look at the manual that was written, okay, and remember who wrote this manual, okay? This manual was written in 1913 by some of the biggest shysters in the world, okay, that did not have the best interest of the dollar, the best interest of the Americans in mind, okay? The central banking system itself does not have the interest of the middle class in mind, and just by its sheer nature of how it works, because we, the middle class, get to fund it, okay? So again, remember, okay? So the whole thing is written, and when you're unwilling to understand and move into a market and understand that some markets will price out themselves, and we don't need to bail out the big banks. If a big bank goes broke, let them go broke. Why should it be the American people whose money we trusted with these big banks, okay? Why should we have to now bail them out, okay? That's my issue, because again, this is something that has been a problem for years, which is why we continue to see the devaluation of the dollar, which is really like offering a secondary of the cash that's in your pocket, okay? Now, I happen to, have a fairly good memory, and I remember, back in the day, people didn't make anywhere near the money they're making today, but they lived a hell of a lot better, okay? Their money went a lot farther than it goes today. You can thank the Fed for that. You can thank their ridiculous policies and their clueless actions, and have no understanding of what the middle class is about, because what they really care about is putting more money into the wealthy's hands. That's what this whole program does, is it continues to destruct currency. and it continues to devalue, because when you can print when you want, okay, it creates a problem. I'm a big fan of ending the Fed, at least auditing the Fed, because I'd like to know what's going on there. Because one thing I do know is that they will blow it this time. Interest rates will get away from them and they will spike higher. And the bond market, which is a pretty big market, is the biggest. The fixed income market is the biggest in the world. That market is going to take it over. And they've already forced the Fed's hand sooner than they want. And I think if you continue to watch, they will force a lot further. And I think it's a shame that Chair Powell got himself muscled and kowtowed down and did not stay the course in which he thought was to be correct. Because at the end of the day, all we're doing here is what the Fed has done for the last 39 years, and that is being bubble builders. This is Bubba's Bottom Line. Todd Bubba Horowitz. As always, I thank you for being here. And of course, we're hot. Last 4 in a row in football. Tonight, we like the Pittsburgh Steelers. Go Steelers. Have a great Sunday, everybody. Have a great weekend. We'll see you back here next week with more about Bubba's Bottom Line, and tomorrow with Bubba's Daily Update. Have a great weekend, everybody. Thanks.